from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Tesla is feeling the supply chain pain, announcing in its third quarter earnings that it will be shifting to new batteries globally. What does the strategy mean for the electric car maker and the industry at large? We'll discuss. Plus, a big potential purchase for PayPal. Pinterest soars on a Bloomberg scoop that the social commerce site could be acquired for $45 billion by the payments giant. How this could be a rebranding moment for PayPal's super app ambitions. And sticking with rebranding, a report that Facebook may be getting a facelift. Is the social network really changing its name, and will it work? We'll debate and brainstorm a few names too. We're going to get to all of that in a moment, but first let's get a look at the markets with Bloomberg's Kriti Gupta. Kriti, we saw a record for the S&P almost.
Absolutely, almost. Green on the screen, Emily, but still not at those record highs. We still have ways to go. The big takeaway here, though, is in the last 5 sessions, you really saw big tech lead the way. In today's session, leading the way lower, really weighing on the S&P 500. So you did see tech really underperform the broader benchmark. I do want to bring to your attention what did well, though, and those are those Chinese ADRs. We know they've been under a lot of pressure really since the start of the year, but you want to also point out that they're starting to get a little bit of that renewed investor bid, and that hasn't stopped. Shares up about 1% for that index. And of course, we can't go on without talking about crypto. Not only did Bitcoin rally once again, but took with it all of its crypto peers. So you do see the Bloomberg Galaxy Index up higher. We'll get to that later in the show. Let's hit the biggest story, I would probably say, in the tech universe right now. And that is, of course, a potential deal, a Bloomberg scoop between PayPal and Pinterest. PayPal potentially weighing an acquisition of Pinterest for $70 a share. That would give the market value of that company about $45 billion. Now, Emily, I have to make this big comment here because Pinterest has actually declined by a third of its value since it last reported its first decline in users over the summer. So pretty interesting to see how this deal is really going to shape up. We are still waiting to hear from both companies. And lastly, I want to talk about the earnings story because you mentioned it in your intro. Of course, Tesla, IBM, and Lam Research all reporting Tesla missing its estimates and posting a $51 million Bitcoin impairment, in addition to talking about really renewing some of that battery strategy. So shares are down after hours. You do also have IBM missing its revenue, really putting the blame on its IT management unit that they are planning to spin off anyway on November 3rd. And lastly, Lam Research also a marginal miss there, $4.3 billion versus $4.33 billion was the estimate. The issue there was the forecast not really hitting the forecast estimates for the next quarter, Emily.
All right, Kriti, thanks so much for that roundup. I want to stick with Tesla and bring in Tasha Keeney of ARK Invest. Tasha, lots to digest here. I want to start with the new battery strategy and the switch to lithium iron phosphate. What does that mean to you?
Yes, well, my colleague Sam Kors has done a lot of great work on batteries. We see that electric vehicle batteries are following a Wright's Law cost decline curve. That means they're getting cheaper, which is going to help Tesla improve margins. So what the lithium iron phosphate batteries mean is that these will be even more inexpensive. They could potentially offer faster charging. But that's the big takeaway, that these are, it's the structural battery pack. It could be a little less expensive, which should ultimately help Tesla with margins.
So talk to us about the supply chain pain. Obviously, this is something that every company is feeling. We have heard Elon Musk complain about that. Do you see it reflected in the numbers?
So I think the thing to think about with Tesla and these supply chain issues is, yes, they're not immune to them, but they're better set up to be more adaptable and to deal with them than traditional automakers, particularly if you think about the chip shortage. Tesla has both the hardware and software talent in-house that it needs to switch suppliers, to write the firmware for those new chips. And so that's not something that every automaker can do. So that's just going to help them with this challenge. Although, again, they're not going to be immune. But I think longer term, what do we see? Well, with the chip shortage that we're seeing, there could be a potential glut in the future as companies try to build inventories of chips they think they need, particularly for the traditional automakers. We see electric vehicles as a percent of global sales only increasing. So the amount of vehicles that a traditional automaker may expect to bounce back from today's levels if they're producing gas-powered cars might actually be lower than they're expecting when they're making these orders. So I think that's something to look out for.
What does this all mean for deliveries in the US, China, and beyond?
Well, we already got delivery numbers for the quarter. They were better than expectations, helped by China. We know that that's becoming Tesla's biggest exporter. It's going to be, its largest plant. So I think, deliveries, I would say in general, they're short term. I think longer term, we're looking at the big picture with electric vehicles. We think there'll be 40 million EVs sold by 2025. Electric vehicles are the way forward, and Tesla's really the leader in this market. And I didn't even mention autonomous technology, which is another area that we think Tesla is really pulling ahead of peers here. So we're signing a 50% probability to them successfully creating a fully autonomous car in the next 5 years, and they can launch a robotaxi network. We think it'll be very profitable. It'll totally change the business model.
Okay, Tasha Keedy of ARK Invest, thank you as always for breaking it down. Coming up, Pinterest soars after a Bloomberg scoop that PayPal is exploring buying the social commerce platform. Could a PayPal super app be the future? We'll discuss next. Shares of Pinterest, as I said, soaring. Take a look at that there. We'll talk about that story after this break. This is Bloomberg. Shares of Pinterest soaring after a Bloomberg scoop that PayPal is exploring an acquisition of the social commerce and media platform. Would this be a smart expansion into e-commerce for PayPal? Well, the potential deal comes at a complicated time for Pinterest. Not only has engagement been dropping, but it's been dealing with a number of accusations from former employees involving race and gender discrimination. Let's bring in Bloomberg's Leanna Baker, who broke this story, and Techonomy founder David Kirkpatrick, who has some opinions about it. Leanna, I want to start with you. Why is PayPal interested in buying Pinterest, and is Pinterest interested in selling?
So PayPal, since it's spun off from eBay, has been pretty acquisitive. They've been doing, billion-dollar deals or a couple of billion-dollar deals a year, but this would be its largest deal ever. We're talking $45 billion. So I think its CEO, Dan Schulman, is looking to make a bold move and try to diversify its income, income sources. Pinterest has a big advertising revenue base, and this is something that, is really a new direction for PayPal. Pinterest, in terms of why it would want to sell now, it's trading much higher than where it went public at $10 billion, but it's never quite reached the same scale as some of the big internet giants that it competes with. So this is just a way for it to kind of partner and cash out because its user base at 400 million is a lot, but certainly it's not as big as Facebook, let's say, as a social network.
And there you see the spike there on the back of your reporting. David, what do you make of this? Pinterest engagement was higher during the pandemic, has dropped since, and one might argue that the product hasn't necessarily evolved much over the last several years or delivered on this promise of being the social e-commerce platform of the future.
Yes, that one would be me. I actually totally would argue that it's one of the most unexploited giant brands on the internet, probably the most fulfilled, so to speak, giant internet brand. Leanna's scoop is really exciting and interesting. I think it makes a lot of sense. Obviously, PayPal has all this capital capability, and they're looking for new areas of growth. If I were, an aggressive leader like Dan Schulman, I would be looking at a company like Pinterest and saying, there's something that a more aggressive managerial style could really turn into a much more important property. I use Pinterest and I like it. I spend time there. And 400 million of us. Come on, that's a lot.
Look, I use it too, and there are definitely moments where I wish it could do more.
Right.
Leanna, PayPal, obviously benefited from the online shopping boom through the pandemic. Explain these super app ambitions. What would that look like?
So PayPal wants to be more than just an online bank. They've also, moved into crypto, and they're just trying to offer more services to build up its user base, and certainly getting access to Pinterest users who are very passionate and just a huge group, 400 million people. This is really a way to help PayPal fend off competition. PayPal has a lot of rivals looking to get in on its turf. There's many ways to pay for things online these days.
David, Instagram has been making significant progress on the e-commerce side, and I'm curious what that competition looks like for Pinterest as years play out.
Well, I think, Instagram actually for Facebook is one of the most promising. Instagram advertising is an incredibly high growth, successful business that's one of Facebook's real prizes. I think Instagram, Pinterest, really, I use it a lot. I'm not conscious of seeing ads. That might be a good thing. Maybe they're doing it really subtly, but it certainly seems to me that it could be way more subtly and carefully and meaningfully monetized because there's a lot of time being spent there. And Instagram is a proof point to show what kind of thing Pinterest could turn into, because Instagram is so incredibly effective with it. And they're very similar in the terms of their basic structure, photo-based, et cetera.
Right. Liana, we're at a time of huge scrutiny on big tech and tech deals. What are the chances of this deal getting done?
I mean, for sure, regulators are going to take a very close look at this if it gets to the finish line. But PayPal and Pinterest, they aren't the tech giants we think about Washington scrutinizing. That's more Facebook, Amazon, Alphabet. So maybe it'll fly under the radar, but I'm sure DC will, closely look at this one.
Right. And at $45 billion, hard to imagine anything of that size flying under the radar smoothly. Bloomberg's Liana Baker, thank you so much for your reporting. David, stick around. You're going to be with us. We're going to talk about Facebook coming up next. Could the social network be getting a new name? We're talking about that report. Facebook is planning to rebrand itself to signal its metaverse ambitions and potentially also repair its reputation. More on that next. And as we head to break, let's take a look at Netflix. Shares falling since reporting third quarter results. The streaming service posted strong subscriber growth, beating estimates thanks to the popularity of the South Korean drama Squid Game. But one entertainment expert told us Netflix should be growing even faster. In an earnings call, CFO Spencer Newman says the company saw strong viewing throughout the quarter.
What we saw as the quarter continued into September, we saw acceleration in our growth, which is what we had been hoping for and expecting, but it was good to see as we got into the strength of our schedule.
Newman says Netflix expects to sign up 8 million more subscribers in the current quarter while turning cash flow positive next year. This is Bloomberg.
We actually saw a 35% increase in the number of creators that are generating six-figure income out of YouTube and in the last year. And so that's just an example of how the creator economy is continuing to grow.
YouTube CEO Susan Wojcicki there talking about the future of the creator economy. You can see my exclusive interview with her on Bloomberg Studio 1.0 tonight, 9:30 p.m. Wall Street time, 6:30 p.m. here on the West Coast, and at those times listed there in other regions. An episode you don't want to miss. Meantime, Facebook could be planning a facelift. The Verge first reported that the social network is considering a new name that focuses on its ambitions in the metaverse. This as Facebook continues to battle an onslaught of negative reporting and the revelations of now multiple whistleblowers. Techonomy founder David Kirkpatrick, also the author of The Facebook Effect, still with us, along with Bloomberg's Kurt Wagner, who covers Facebook for Bloomberg News. David, I want to start with you. Given that you wrote the original book on Facebook, will Facebook rebranding make a difference?
Oh, come on. I mean, I heard this and I just went, oh, please. No, not one more kind of image-oriented, obsessive action on their part. I mean, this is sort of like, somebody's pinned to the ground and everybody's on top of them and they're saying, no, I changed my name, let me up. I mean, it's crazy. What are they going to call themselves? The Circle?
We're going to debate some of those names. Circle, Meta, Horizon. Kurt, any ideas?
No, you mentioned the ones. I think one of our colleagues was very astute last night, noticing that meta.com and meta.org, I think, are both owned. Those domains are both owned by the Chan Zuckerberg initiative. Really? So, maybe if you're looking for some online real estate, they've already got a leg up there. But, this is clearly a play to try and deflect a little attention from a lot of the stuff they're dealing with, but also position Facebook as a front runner or a leader on this new Metaverse project, which a lot of different companies are going to be involved in. So you can see very clearly why they would like us all to buy into this new identity.
So Alphabet did it, but most people still call the company Google. Snap did it, but Snapchat lives on. And, among some of the other names being thrown out there, Fakebook, Faceplant, Zuckerverse. I mean, the name sort of conveying public sentiment about Facebook now. David, what does that tell you?
I think if I were their PR advisor, I would say this is the worst time to do something like this. But I happen to be somebody who thinks they ought to meaningfully respond to some of the legitimate criticism of the way they manage and govern their services, which they don't agree with. So it's just, I really do think this is very much about trying to change the narrative, and I doubt if it will work. Now, also, when it comes to the metaverse, there was a really good interview yesterday with Evan Spiegel of Snap, the Wall Street Journal conducted at their conference. And he was really kind of making fun of the idea of the metaverse and saying it was really an escapist, borderline dystopian thing, and that all the things Snap is doing is trying to connect you with the real world. And that sounded really grounded and real to me. I don't really know what Facebook means by the metaverse, and frankly, nobody else does either in the end.
So that is the question, Kurt. What is the metaverse? And what is Facebook's version of the vision for the metaverse? And is the metaverse going to be good for society, or is it going to be saddled with the same problems and controversies that Facebook itself is?
Well, I'll work backwards. It's hard to imagine that it's not going to be saddled with a lot of the same issues, right? These are all going to have the same content-related issues, the same privacy-related issues that you currently have with the internet, and perhaps even more so because it's going to be more immersive than what we're doing today. Now, I think what is this is obviously still being worked out, but my understanding is the vision is not just an internet that you kind of look at in 2D from your phone screen or your computer screen, but one that you kind of interact with in 3D via, AR glasses or VR goggles or something like that. It's something that you almost step into versus observe through a screen. And so that is their vision. I think a big challenge here is that are other companies going to buy into this, right? It only really works if you can go into the metaverse and use all the experiences that you love. Can you use Spotify? Can you use Apple? Can you use Netflix? And if all of those companies don't say, sure, we're going to play into this vision Facebook has, I'm not sure the metaverse is a very compelling use case, regardless of how private or secure it might be.
Meantime, another report by Politico that eBay founder Pierre Omidyar is funding Facebook whistleblower Frances Haugen. Of course, we know that Facebook money is being thrown via lobbyists all over Washington, but it is important to emphasize there's big money on the other side, too. This wasn't previously disclosed. David, does this change anything for you?
Well, we knew that Pierre Omidyar was somebody very, very focused on ethics, and we know that Facebook is a company, in my opinion, not very focused on ethics. So the idea that they would be clashing and that Pierre might be especially upset about this company is hardly a surprise to me. One thing I would say is that a very notable aspect of Frances Haugen's entire strategy and the way that she's come at this whole project is the strategic approach. She first came, anonymously gave the Wall Street Journal data. Then she did a 60 Minutes interview. Then she testified to Congress, and she's testifying in Europe. It's very methodically thought through, clearly the result of having some very good advice from real professionals who are now, apparently, according to Politico, being paid by Pierre Omidyar.
Meantime, Kurt, Facebook has hinted that more documents could be coming. What's in store for the next week? What more bad news about Facebook are we going to see? And talk to us about the company's PR strategy. I mean, they're not pulling any punches right now.
I would say this is the most aggressive, combative that I've seen Facebook PR in the 8 years that I've covered the company. It seems very clear to me that they are, worried about what's going to be coming out, but also feeling, not just worried, but actively defensive because they don't feel like they're getting a fair shake here. You saw that from a tweet thread that their comms team posted earlier this week, kind of accusing journalists of teaming up together almost conspiratorially against the company. And so I think this is, I've been saying this for a couple of weeks. I mean, there's tens of thousands of documents that Frances Haugen brought when she left the company. We've seen, a half dozen stories from the Journal, right? I just think there's a lot more to uncover. There's a lot of people who are starting to get their hands on these documents. And so I think this is just the beginning of what's probably going to be a very long month and news cycle for Facebook as people start to parse through some of this stuff.
And David, obviously you spoke to Mark Zuckerberg many times over the last decade and a half. I'm curious what you think is going on inside his head right now as he contemplates this rebrand, thinks about the company's future, and is getting kind of attacked on all sides.
Well, I often say that I really didn't anticipate that he would become so beleaguered and so self-righteous when I spent so much time with him back in the earlier years. I think what goes through his head is fundamentally that he is absolutely firmly convinced that what he's doing is good for the world and that we don't give him credit, we don't understand it, and it's not his fault, it's our fault for not really getting it, for not realizing all the good that Facebook does for the world. And because he has so much certitude about that, he basically is unbending in the face of almost literally any criticism, despite the fact that so much of it is so well-founded, even with documents now.
All right, well, The Verge is reporting that this name change could be revealed on October 28th, which is the same day as Facebook's Connect event, which we will all be tuning into. Bloomberg reporter Kurt Wagner, Techonomy founder and editor-in-chief David Kirkpatrick, thank you both. Meantime, Facebook has been fined $70 million by the UK's merger watchdog for failing to update regulators on its acquisition of Giphy. The UK's Competition and Markets Authority said Facebook consciously refused to follow UK law requiring companies to remain separate while an investigation into a proposed deal has been underway. The decision on the deal is expected by December 1st. Coming up, as Bitcoin hits an all-time high, traders can now jack up their bets with options on the newly minted ProShares Bitcoin Strategy ETF. We'll talk about the current crypto landscape and how high Bitcoin's price can go next. This is Bloomberg.
It's been quite a rally.
I think we'll see new all-time highs in Bitcoin, every month on a go-forward basis.
Never say never. I mean, you look at a year ago, we were probably trading at around $12,000. So it's crazy to think that now we're at $66,000.
I would think about buying it on any dips that we get.
I think it is getting the institutional adoption that many have been talking about for years.
When you get the inflows, when you get some of the really large pension funds, it doesn't take much to push price up another 50%.
Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Those were just some of the guests we've heard from throughout the day talking about Bitcoin's price surge, the cryptocurrency rallying to a record topping $66,000 for the first time as we start to see greater mainstream acceptance. Kriti Gupta walking us through the crypto day. Kriti, tell us what happened.
Emily, yet another record for Bitcoin, 66,000 like you mentioned. But I wanted to take a little bit of a walk into history because we have had Bitcoin crashes before. But here's the kicker, I should say. It's actually taken years to recover in Bitcoin prices. The last crash that we had earlier this year, it took months to just hit a new record high. And that's really what this chart is showing. That crash we saw in 2018, years until really 2020, 2021 to get back to those levels. And here we are, 66,000. So what's behind it? We talked about mainstream acceptance. We're talking about potentially a retail bid, but some of it is across asset trade as well. I want to show you a terminal chart here of really this correlation that you're starting to see show up in Bitcoin and bond yields in particular, specifically in the 5-year, the belly of the curve. You are starting to see that reflation trade in the bond market kind of get shadowed a little bit here on the Bitcoin market as well. So interesting to see that this is actually a cross asset dynamic rather than Bitcoin kind of is doing its own thing. But let's talk about the story of the week, which is, of course, that Bitcoin futures ETF, I should say, that debuted yesterday. One of the big concerns was that if it does rally, if it does actually do well, does that take some of the bid out of spot Bitcoin prices? And Emily, I'm here to tell you, it's only been 2 days, and both the Bitcoin futures ETF and Bitcoin itself, the spot price, they've both rallied. The question is, will that continue for another day, another week, another month? Let's see how long that pattern will stay.
All right, Critty, thank you for breaking that down. Sticking with Bitcoin's rise, I want to bring in Matt Hogan of Bitwise, CIO of Bitwise Asset Management. Matt, what does the price today and the recovery time from the last high indicate to you?
Well, I think it indicates what we've been talking about so far in this segment. We're seeing a whole new class of investors move into crypto. We're seeing institutional and professional investors move into the market, and that's moving the prices higher. You know, Emily, before this ETF launched, there was this big question: will an ETF find an audience? There are already all these ways to buy Bitcoin. You can buy it on Coinbase, you can buy it on Cash App, you can buy it through PayPal, you can buy it on Robinhood. And what we've learned over the last 2 days is there was still a huge class of investors sitting on the sidelines because it wasn't easy enough to buy crypto. They put $1 billion+ into the ETF in the first few days, the fastest growing ETF of all time. And what we know from past ETF launches in other assets is that's going to build over time. So I think this is, maybe the start of a new bull market in crypto, the professional or institutional bull market in crypto. It's a very exciting moment.
But how much of it is hype, given that it's not, this particular ETF isn't actually directly tied to Bitcoin, but more tangentially tied to cryptocurrency?
Yeah, that's right. It's not the Bitcoin ETF we all wanted. We wanted a physical ETF. It's an imperfect ETF. It's going to trail the spot price of Bitcoin over time by a reasonable amount, and yet people are still buying it. Now, it does have a direct pass-through impact on demand for physical Bitcoin. That's an important thing to note. When people put money into this ETF, it buys Bitcoin futures. For people to sell those Bitcoin futures to the fund, they have to hedge it. The way they're hedging it is by buying physical Bitcoin. So the price appreciation you're seeing here is both excitement about what an ETF means for the crypto market long term, but also a direct impact on the market. Again, $1 billion flowed into this ETF in the first 2 days. That's the fastest growing ETF of all time. You have to believe underneath the surface, those arbitrageurs have probably picked up $1 billion in physical ETF to hedge those futures position. So even though it's not spot Bitcoin, it is impacting the spot Bitcoin market.
I've got a chart here in the Bloomberg, Matt, showing that Bitcoin has outpaced even Tesla, which is, of course, many folks think it's one of the hottest stocks out there. Do you think the pace of Bitcoin's rise will keep up, or are these fits and starts just going to be the name of the game?
It's certainly going to be a volatile market. Bitcoin has been a volatile market since it came into the world, a dozen years ago. That's not going to go away anytime soon. I don't even know over the next week, the next 2 weeks, if we'll see the kind of excitement and price appreciation that we've seen. But I think over the next year or 3 years, this is going to be a signal moment that marks the entry of institutional investors into this market. I'll give you an analogy, Emily. I come from an ETF background. Back in 2004, the last time we were so excited for a new ETF was when GLD, the gold ETF, came into the market. And it got to $1 billion in 5 days. Now, this one has gotten to it in 2 days. But the important thing about GLD to note is that after 3 years, it was at $10 billion. After 5 years, I believe, it was up at $75 billion. The assets build over time. And I think you're going to see that in the Bitcoin market as well. We're just getting started.
What about the regulatory risks? Obviously, what's happened in China and waiting for the hammer to drop in the U.S. and not knowing for sure what that's going to look like.
Yeah, there is regulatory uncertainty. I would say that there is both risk and opportunity. If regulators overreach and constrain the crypto market too much, that could be a setback to prices. We could see something akin to the crypto winners that we've seen in the past. On the other hand, if we get progressive regulation or fair regulation, and the launch of this futures ETF is an indication that that is the likely pathway, I think that will unlock a bull market. So there's two sides to the regulatory story. Yes, there is risk of overreach, but there's also the opportunity of unlocking the full potential of what crypto could be. And I think investors, at least in the past few days, are betting that we're going to be on the progressive side of that and not the restrictive side of it.
Quickly, any thoughts on Coinbase getting into NFTs?
NFTs are really fascinating. If you think we're only at inning 2 on Bitcoin, where's the pregame in NFTs? I think it's going to be a signal moment for the market. NFTs, a lot of people think there's a bubble there. There's certainly elements of it. I think we're going to look back in 3 or 5 years. It's going to be a much bigger market than it is today. It's very exciting to see Coinbase get into NFTs. It means for NFTs about what the launch of a Bitcoin futures ETF means for Bitcoin. It's an important signal.
Okay, good comparison. Matt Hogan, CIO, Bitwise Asset Management. Always good to have you here, Matt. Appreciate you taking the time. Well, Goldman Sachs was the first big U.S. bank to enter the crypto business. The firm began mulling the idea of a Bitcoin trading desk back in 2017 when Lloyd Blankfein was CEO. Now, in retirement, Blankfein remains open to crypto as a concept and is impressed by its resilience as an asset. He spoke with Bloomberg's Eric Schatzker, explaining his thinking and talking about the need for regulating a Wild West market.
A lot of bright people think it has a bright future. I'm telling you, I have whole foot and 4 toes into the old world, and it's not something that I gravitate to, and I can think of a lot of reasons why it won't work. But I remember when they were auctioning off spectrum for cell phones, and say, well, why would anyone need a cell phone? All you do is you pull up to, you drive in your car, pull up to a phone booth, and dial a phone. Who would carry that clunky thing? And the point is, there are a lot of things in this world that have worked out awfully well.
You sound, for somebody who used to run a bank, pretty constructive about crypto.
I'm open to it. Look, I ran a bank and I ran risk. And you can't be closed. You have to separate fact from opinion. Nobody knows, nobody knows the future. I mean, there's all sorts of things. There's a lot of things that move in directions that I couldn't and wouldn't have anticipated, and no one else would have either. So to just come out and say that a market that's already in excess of $2 trillion, that faces all these regulatory headwinds, that a lot of people really don't like and would enjoy seeing crushed, somehow managed, it doesn't, every day it doesn't look like it's flourishing, but on no day has it recently looked like it's dying.
Do you own any? Do you own any crypto?
No.
Goldman Sachs former chair and CEO Lloyd Blankfein there. You can see more of that interview on Front Row this Friday, 7 p.m. Wall Street time, 4 p.m. here on the West Coast. Coming up, the pandemic of cybercrime. We'll talk with digital security firm Aura about their latest funding round and their solutions to help us proactively protect ourselves. Next, this is Bloomberg. We want to bring you the latest developments on the video game publisher at the center of sexual harassment claims, and that is Activision Blizzard. The company says more than 20 employees have now left the company and another 20 have been disciplined as part of an internal investigation into allegations of misconduct. Activision has been facing a cultural reckoning of sorts after a lawsuit filed in July in the state of California alleged Activision fosters a frat boy culture. The SEC is also investigating the company's disclosures regarding workplace issues. Meantime, the booming cybersecurity industry is adding a new heavyweight to its ranks. Aura, a digital security company backed by Hollywood mogul Jeffrey Katzenberg, has just raised $200 million in a new funding round led by Madrone Capital Partners. I want to bring in Aura CEO Hari Ravichandran now to join us now for more. Hari, thank you so much for joining us. So your company brands itself as an easy-to-use, all-in-one, proactive digital security solution. What exactly does that mean?
Here at Aura, our mission is to create a safer internet. What we've been doing is focusing on transforming the consumer digital landscape, which, if you think about it, really hasn't changed all that much, not a lot of innovation in the last decade or so. A lot of the solutions out in the market are typically much more reactive, where basically you have an incident or an event, you get an alert, you try to kind of remedy it. A lot of consumers really want something that's simple, all-in-one, proactive, easy to use, and really would rather prevent these issues from happening versus just reacting to it. One of the things we've been noticing is in the last year, for the first time ever, consumers lost more money to cybercrime than to home burglary. And this trend, it's been going up and up, and for the first time, the lines crossed last year. So we think this market's going to be huge, and it's getting bigger and bigger by the day.
Jeffrey Katzenberg is obviously an entertainment legend. How often do you speak with him, and what does he bring to the table? What kind of advice is he giving you?
You know, it's been an amazing experience. We spend a lot of time with Jeffrey. I would say probably in any given day. I talk to him about 2 or 3 times a day. Amazing amounts of energy, someone that really has been there, done that, and a lot of sort of knowledge from different industry that he's able to impart to us in the digital security space. Especially around building companies of scale. It's just been a tremendous experience, and he's been a great board member, investor, and his firm WonderCode that he founded alongside with Sujay Jaswa. They've been our early and sort of most sort of great partners through this whole journey here.
That's pretty active for an investor. That's interesting. You know, this is a market that's becoming very crowded. You have, you know, this sort of outsider status. I wonder if you think of that as an advantage or an inconvenience?
I really think of it as an advantage, because if you think about the market, there's a lot of companies out there. A lot of them kind of got started at a time when the problem set was just very different than the problem set of today. So a lot of these solutions were made for desktops. The distribution models were a little bit dated. So as we came into this from the outside in, we looked at it and said, look, the problems of today, consumers don't want to go curate 10 different products. They want to really kind of have an all-in-one solution. It can't be too expensive. It's got to be something that really almost reads their mind and tries to figure out what the right solution for that consumer and family is. And that level of innovation you can only get from looking at it from an outsider's lens. And we really are kind of grateful that we have this slightly different perspective than the rest of the market. And it really is proving well in terms of being able to innovate on the product side of it.
Cyber attacks are on the rise, ransomware in particular. I recently interviewed Satya Nadella a few months ago, who talked about the rise in cyber attacks as the new pandemic. Take a listen to what he had to say.
Somebody described this to me, like, while we have a pandemic, we have another real pandemic, which is a cyber. And that's going to be there with us. But at the same time, I think what is really now much more, I think, in the consciousness of people is the level of attacks for sure have increased, but the need for our response to be top-notch has also increased.
Is cybersecurity the next big global threat that will require international cooperation?
I really think it is. And so there's a lot of sort of focus on the enterprise side of cybersecurity today. You know, how do enterprises protect themselves and protect against ransomware? A lot of this is also starting to bleed into the consumer landscape. And even from a policy perspective, even from sort of a cooperation perspective, there's a lot more venture dollars that go into the enterprise side of things. We think the next wave of this is how it affects consumers and families, and how do you come up with solutions that really can help these consumers and families in an easy to use manner to make sure that they are kept safe, especially as they use more and more devices.
So what's coming next for you? Is there a public offering on the table?
Look, I mean, the addressable market here is massive. I mean, the TAM here is huge. Anybody that's got a device, it's not just US based, it's US and global in nature. So we think with the right product, the right innovation, the right team, the right capital base, this is just a massive opportunity. We've got an opportunity to create a really, really big company here. Eventually, that does lead towards a public journey, but we want to make sure we're ready for that journey. We want to make sure that the product is working really well. We've got the makings of a great brand. We've got great distribution. So sometime in the next few years, we would certainly going to consider that. But overall, we think that we're very well positioned for a massive amount of success, especially as a lot of these forces converge here in our favor.
And the price of the product is fairly low. I mean, do you see that continuing? Will you have to raise prices at some point? And how do you maintain quality on a long-term basis?
So we have been very careful about making sure that we vertically integrate all of the technology we need so we can bring the pricing down for the consumer. Because if you want to make the product accessible, if you go today and you go buy all of the solutions that make up the core of Aura individually, that may cost you $80, $90, $100 a month, which for most families, they don't want to spend that kind of money around this particular problem set. So we really have kind of brought that down to about $15 a month. We think that's about the right price point. And we really hope that we can continue to keep adding a lot more features as we get more distribution and scale reach, while keeping the pricing very, very consistent for families so they can afford it.
All right, Aura, we'll keep our eye on you. Hari Ravichandran, the CEO of Aura there, thank you for joining us. Coming up, Google reveals its latest smartphones, the Pixel 6 and the Pixel 6 Pro. But will the redesign be enough to beat out rivals Apple and Samsung? Details on that next. And as we head to break, let's see how Tesla and IBM are trading after hours, both out with earnings after the bell. Tesla reporting revenue fell short of Wall Street estimates, but managed to beat third quarter earnings projections. IBM also missing revenue estimates, highlighting challenges for the company to return to growth as it prepares to spin off its low-growth legacy computer services unit. This is Bloomberg. More earnings coming up tomorrow when Intel comes out with its quarterly report. Analysts from Susquehanna saying the chipmaker's performance in the PC market will be a big focus for investors. All this as the chip shortage continues to weigh on global supply chain issues. That's also the focus of Bloomberg Markets. The close Thursday, supply chain pain. Our Caroline Hyde and Romain Bostic will be live from the second busiest container port in the country, the Port of Long Beach. As supply chain issues across the globe persist, they'll be talking to key voices impacted by the supply chain squeeze. That includes Maria Cordero of the Port of Long Beach, California Executive Director there, Jeff Freeman of the Consumer Brands Association, and Jessica Caldwell, Edmunds.com, Executive Director of Insights. Well, Google's new smartphones, the Pixel 6 and the Pixel 6 Pro, were unveiled yesterday. The new phone includes custom chips and enhanced camera features, but the most aggressive point of competition, the price point. Over $100 less than the iPhone. For more, we'll bring in Tay Kim of Bloomberg Opinion. And Tay, you say that Google could just have a smartphone hit on its hands for the first time. Why?
So Google's had a really tough time in the smartphone market. I'd say for the last 5 years, they've been struggling at like 1 to 2% market share. But this is the first year they've designed their own chips, and this is a huge difference maker. They've been using off-the-shelf chips from Qualcomm, and it's pretty much a standard, no way to differentiate themselves. But now with this new Google Tensor chip, they're saying they could do these unique artificial intelligence features that should really differentiate them. And I also want to talk about the pricing. They cut the price $100 for the standard model. So the Pixel 6 at $599 is like hundreds of dollars cheaper than the comparable models from Samsung or Apple.
So obviously we've got a holiday season coming up. You've got people potentially wanting to upgrade. How much switching do you think will actually happen? People moving from the iPhone or moving from Samsung?
I think they could double, triple their market share and kind of increase their market share over the next few years. I mean, going from 2% to 10% will be a huge move for them. Obviously, the vast majority of people that use iPhone will stick with iPhone, but they could, double, triple, quadruple their share. And these features are really like wow, like gee whiz features that you can't really get on any other smartphone platform. So like, for example, there's this thing called Magic Eraser, where you double tap on an object or person and you can remove that person from the background. So it's like Photoshop on your phone in the easy way. There's this other thing called Face Unblur, where you could tap someone's face that's a little blurry and they'll sharpen it for you. And there's also this real-time translation stuff that's amazing, where for 48 languages, it can do real-time interpretation. So there's all these neat features along with the price that I think that Google's can just do so much better this time than they have in the past.
Quickly, supply chain issues impacting Apple. They might have to slash production of their newest iPhone by as many as 10 million units. Is Google going to be grappling with that as well?
I think they're so much smaller than everyone else that they'll have less of the issue to get, double or triple the units they need. I've been watching their website over the last day. A lot of the models are already sold out on their pre-order website. And the social media buzz has been off the charts. So I think Google will be fine in terms of their demand and their small market share of the market.
And simply because it's Android, would you say Google is a bigger threat to Samsung than Apple?
Yes, I think they'll take more share away from Samsung than Apple. That's definitely for sure, because it's easier for Android people to move to the Pixel because it is Android.
Okay. All right. Bloomberg Opinions take him. Tay, as always, thank you for joining us. And that does it for this edition of Bloomberg Technology. Make sure you join us tomorrow. We're going to be joined by SAP CEO Christian Klein, as well as Tony Fadell, the inventor of the iPod, iPhone co-inventor, and of course, founder of Nest and principal at Future Shape. Always good to have him here on the show in a conversation you don't want to miss. I'm sure he'll have something to say about supply chain issues as well. I'm Emily Chang here in San Francisco. This is Bloomberg.